Hey traders, Akil Stokes here. Welcome back to another big boy edition of the Weekend Trading Edge video. And yes, I'm calling it a big boy edition because you guys specifically requested more analysis, more lessons, and absolutely zero consideration for your time. So that's exactly what you're gonna get, you beautiful trading nerds. Now, last week was one of the busier weeks that we saw in the market. We had interest rate decisions come out by three main central banks. We had Australia come out, we had Canada come out, and we had the FOMC, so here in the US, come out. And now that we've made it through that storm, hopefully, we get to run it back and do it again, because this is going to be another big week with Bank of Japan, European Central Bank, and Bank of England all having interest rate decisions coming out on Thursday. And prior to that, on Tuesday, we've got that big backlog of jobs numbers that we've been waiting for the last 3 months or so. Fun! Anyway, I hope you're ready, and I know that you are because you're watching this video. Now, at the very end of this video, I'll break down kind of what I expect from those releases, along with some other Trump-related news that may massively shake the market. You know how it goes. But for now, I want to get into what you guys came for, and that is the technical analysis. So let's hop into the charts. So we're going to get started here on the euro dollar, and hopefully you're a frequent viewer of this show. If you are, then everything that we spoke about last week and the week before and the week before should be compiling upon each other, and you should have a good relationship with our expectation from this pair. If you're new, however, we had a few patterns set up, but more importantly, we are currently trading at a previous level of structure. We spoke about the concept of overlapping structure levels with our live room members this week, meaning that our first level of structure was right here. You can see that we broke and closed above it. But if we move this line a little bit higher, or even better, take out a box tool, you'll see that we ran right into another level of structure. So as we go through that four-step process, IPDE, identify, predict, decide, execute, despite the higher high, higher close, which I know, I tell you, when we have a higher high, higher close, then we should expect a continuation higher. But in this case, we shouldn't expect a continuation higher because we've already gone higher to the higher point that we expected price to continuate to. Yeah, that. So anyway, let's see what happened here, right? The market just ended. I put this off a little bit just so we can get the close of all these candles. And we indeed closed with an inside day. An inside day essentially means that the price action range from today's day of trading traded completely within the range of the previous day of trading, which essentially just means consolidation. When we go down to a lower time frame, the 4-hour chart, we start to see a little bit more clarity, and I have two opportunities for you here. So price action rallied up, as you can see. We created a high right here. Remember, this white line is the high of that other level of structure that we noted out, and we started to retrace off of that. Now, we didn't quite get there to end the day, but we started retracing to this level for a retest. Now, if price action were to, and pay very, very close attention to this because this is a trading rule for this particular pattern, if price action were to test the highest close, yet not close above the highest high, this would give us a double top pattern. And for you guys who have been in tune with kind of the lesson of the week here at Tier 1 Trading, we may end up seeing some divergence with it. We don't know yet because we haven't gotten there yet, but the RSI is certainly setting up where it looks like that is going to be the case. So if you get a double top here, this is a more conservative approach at a short entry. So for you guys who are looking to get shorts, this would be a reason to get short. Again, stops obviously want to be above the double top. I would say this as well. If you can, you want to get above our higher level of structure. Me personally, I never like having stops below a key level of structure. It makes no sense as I lag all over the screen. If that key level of structure represents the ceiling of which I expect price to operate in and not crash through, then for me, a stop loss above that ceiling, or before that ceiling, excuse me, wouldn't make sense, right? This goes back, if I can get words out of my mouth, this goes back to the whole thing of like, if we are creating a force field to protect us from aliens, it makes no sense to stand outside that force field. And yeah, right? So anyway, stop should be above those highs if you're able to do so. Now, the next question is, where do we expect price to come to? Well, two areas, right? The first area that stands out to me is going to be this little pregnant pause right here. The second area would be this entire zone. But what I want to do is I want to bring in some volume here just to see if one level stands out amongst the other. As always, I have not done this yet, so this is going to be a surprise. You can see the delight in my eyes if it ends up working out in my favor. Here we go. Yeah, kind of right in the middle of that zone. So the highest volume spike, the point of change, which is this this white line right here, meaning the highest level of volume in this area, is going to be right down here at 116.36. That's not a bad place to look for targets as well. Now, as we dig back into these first targets, I do want to give you a second scenario, and this is something that we covered a few weeks ago here on the Trading Edge. It was also a question that I just got from one of our traders on the platform, Scott, giving you a shout out, where Scott asked a question. He's been studying kind of trend continuation and counter trend trades, and he was saying, hey, Akil, what is it? I'm imagining he was doing this while looking at the charts, right? He's in deep thought at the charts, and then he goes, could I have an opportunity where I sold, got to a level of previous structure, and then bought it back up? And I typed in, yeah, you can certainly do that, right? As a newer trader, you want to focus on one style of trading at a time, but you can certainly go from one trade to another, and this may be one of those situations. So let's hop down one more time frame here and look at this double top, and maybe you guys can see what I'm going to tell you before I tell you what you're going to see. So if we look at this ebb and flow of price recently, we've done this, right? We've come from this little consolidation pattern up to here. This is our pregnant pause. We retraced up to here, and then we extended up to here before retracing again. If I accidentally took out my Fibonacci retracement tool and measured it from this swing low to this swing high, we might accidentally come to a 50% retracement. This would put me on alert for a potential bat pattern. So we may have a harmonic and advanced pattern formation setting up, setting up like this. Swing low to swing high, X to A to B, B to C, currently, wherever this ends, if it ends, and then a CD completion right down here at that 886. So remember, we spoke about this area as being one of the areas you can look for targets at with that double top. So yeah, this does offer the opportunity where if price comes down from your double top, you can trade it down, and then you can stop and reverse, right? Remember, we spoke about this a few episodes ago, and buy it right back up. And if you guys are not familiar with the stop and reverse, I'm going to link a video below that explains the stop and reverse. So there you go. Yes, the Euro Yen is next. This is an exciting one. I told our Tier 1 members this during the week. Euro Yen, I think it was about 2 years ago, I had this run on Euro Yen where I was absolutely just milking it for everything it's worth. And then I feel like I went an entire year with maybe 2 trades on the Euro Yen. But this year, the Euro Yen is back. It is in continuation mode right again, and it makes me very, very happy, right? So let's go to the weekly once again, just so I can remind you guys of what we're looking at on the Euro Yen. Let's actually do this, and I'm sorry for repeating myself, but it's a good learning experience to get repetition. Horizontal line right here. I'm going through my IPDE process, identify, predict, decide, execute. I want to make sure that we are not right at a previous level of structure. We need to go back to 1991 where all that cool stuff happened, and we can see that although we are in a zone of a previous structure, we are not at the extreme. So it's not a free path to glory here, but it's certainly not a path where I would say that, hey, I don't think we're going to go any higher. So I guess it's in the middle somewhere. So the point is, we could go a little bit higher. 186 is the number that we've been stalking for the last month or so, and we're slowly getting closer there. And by stalking, what I've said weeks ago or months ago on this channel is that we are going to look for buying opportunities until we get to 186, and then we'll reconsider. And so we haven't gotten there yet, so we're going to keep looking for buying opportunities, and you see the market has been very nice to us. Now, during the week, we put out some pretty cool patterns. We had a flag pattern. We also had a high and tight flag pattern right here. There's another video that I have archived that I haven't edited or anything yet, showing you the analysis from the live room. Maybe I'll put a preview in a smaller screen somewhere in this chart so you can see it, but I'll share the main one hopefully next week. But essentially, a high and tight flag is an extremely powerful breakout pattern in the market. We had that. We broke out. We are still looking for continuation. So there is no signal yet, but as we've been doing since forever, wait for the pullback, right? A little bit of relief, and then look for that extension higher. And then until we get to 186, keep waiting for the pullbacks, keep looking for the extensions. Keep waiting for the pullbacks, keep looking for the extensions. It is not rocket science, but we just have to be very disciplined in what we wait for. Next up is going to be pound yen, aka the beast. And it's interesting. Pound yen is usually the leader when it comes to pound yen and euro yen. I look at euro yen as being like the little cousin of pound yen, where it's not exactly the same, but it kind of wants to do the same thing it does. But in this case, euro yen seems to be first. And there's all fundamental reasons behind that, obviously. But how we already had a flag or two flags on euro yen over the past week or so, we now have a flag forming on the pound yen. You can kind of see it right here on the daily chart, this little bit of inward slanting consolidation. So it's a little bit different than the high and tight, which goes sideways like this, but still a flag pattern in its own right. Now, just as we did with the euro yen, I want to get an idea, some perspective of where I'm at. So I draw my horizontal line on, and I look to the left. I see that, did we break and close above this level of structure right here? Yes, we did. So I can keep my bullish bias. Let's make sure we're not at another level of structure that we need to pay attention to. And I'll go to my weekly for this. And again, we're paying attention to this top line here. We'll go back to 2009. Again, the year when I first started trading. And once again, actually, I guess 2007, 2009 when I first learned about Forex. But once again, we're at a level of consolidation here, but we're nowhere near the highs, right? I can definitely expect price action to continue a little bit higher to at least the highest close up here around, what is this, about 214s, 215, somewhere in that area. So we do all that just to, again, create our directional bias and say, yes, I think the market can go long. And why is that important? Well, because if I'm looking for long opportunities where I need the market to go long in order for me to make profit, I better be sure that my analysis lines up with it. I won't go into a whole rant on this, but it's a big problem that lots of traders make. They don't actually do analysis. They look for the thing and they make a prediction, but they don't actually understand that, hey, I need to do analysis to set up a directional bias because my directional bias is going to tell me the path of least resistance. They get excited over the entry and all that fun stuff, which is somewhat important, but honestly, your directional prediction is much more important than the entry because there's tons of ways you can get involved, right? So anyway, going back down on here on pound yen, right? We have that room to go higher. So let's see, how can we get higher? Well, we have our flag pattern, right? Again, we saw something very similar here. Price action, actually, we saw it a couple times in a row. This one's a little bit sad, to be honest, but we saw it right here, swing low to swing high, and then we saw a downward consolidation before a break up, right? Now we saw it again, swing low to swing high, and we see an inward slanted formation, and we would expect a bullish break. Now, just like with the euro yen or any other flag or consolidation pattern that I ever talk about on this channel, 3 ways to get involved: the before, the during, and the after. The before is at some point down here, right before the breakout actually happens, and that gives you kind of the most opportunity to trade it all up. It also gives you the most risk, and I'll talk a little bit more about that later. The during is during the actual breakout. Again, I didn't show the euro yen breakout video yet, but when I show it, you're going to see an interesting discussion on violation points, slanted violation points versus horizontal violation points. regardless, whatever is your fancy, whatever fits your fancy, you want to see a violation of that level. So if you are a trend line trader, you want to see a violation of the slanted trend line. If you're a horizontal support and resistance trader, you want to see a violation of that horizontal level, but that would be the during. And then the after would be waiting for confirmation of the violation and or a pullback or a violation, then a pullback, and then a chance to get involved. Now, real quick, what makes this a little bit different versus the high and tight flag as far as like the aggressive approach at the bottom of the little deal here is this. So in a high and tight flag, right, we have a solid level of higher resistance, a solid level of lower support. So we have this horizontal support level right here. We know that if this pattern is going to be true, we should not violate this level, which makes it very easy to say, hey, I'm going to put a stop loss. I don't know what face would be used for a stop loss, but I'm going to put a stop loss below here because I'm going to be happy if I get stopped out. I don't know. Anyway, because we know that if price violates this level, the pattern is invalidated. If the pattern is invalidated, we don't really want to be in the trade, do we? No. So we're happy being out. On a traditional flag pattern, we have this natural ebb and flow of lower highs and lower lows. Ooh, I got bars again. Look at that. So what that means is that if we are looking at this flag right here and price, I'm going to give you a pop quiz. If price were to do this, is the flag violated? Well, no, right? Because we're just going with the natural flow. Here's a high, here's a lower high, here's a lower high, here's a low, here's a lower low, here's a lower low. This is still a valid pattern. So it's a little bit different because on one hand, the high and tight flag, you have confirmation that the pattern is invalidated. With this flag pattern, you don't. So it just makes it a little bit more difficult to or I guess maybe a little bit more aggressive is the word, to enter in that before sense. But it's doable. I'm not saying don't do it. Just these are things you want to consider. Anyway, potential breakout here. And again, we have room to go all the way to 214s up there on the pound yen. Pew! All right, Euro New Zealand is next, and you can tell by the marks that are on my chart that I never look at Euro New Zealand unless it's for this video. But if you remember, this was one of my top trading opportunities from a week ago. We have a bullish continuation setup that is setting up. I'm not going to bore you to death, but you can see kind of our blue line is our next expectation of where price can go. So yes, we can go higher. And we were looking for a pullback, and we had this ascending channel. We had some divergence. Divergence for you guys that have been studying divergence all week. I love you little trading nerds. And we got some relief. And we haven't really done much this week, right? We looked at this last week. It had to be, what was it? Right here over the weekend, and we were right here. And then all we did was this. But we put in a very deep retracement here. We do have some hidden divergence, it looks like. I got to zoom in. I'll do that later. And we ended the week, well, actually, we ended yesterday with a higher high, higher close. So if you are an aggressive trade enterer, this higher high, higher close, and what that is this candle right here that breaks and closes above this one. Ooh, that's also an inside bar. Oh, there's so many things to talk about. We'll leave the inside bar alone. We'll save that for another episode. But this could be a reason for entry. And because this retracement is so low, it gives us a really, really good risk reward. Let's kind of do this live here. Our ATR here was 110. Look at ATRs making their way back. We're bringing ATRs back. Ow! Something. Forex market attacks. Should have thought about that before doing it. Anyway, no more bars for me. Our ATR is 110. Let's get below the low of this candle right here. Our low is 20087. So we're looking at 99 somewhere. I don't feel like doing math, but let's put ourselves like right here below the 98 even handle. That works, right? So anyway, we have a stop loss, right? You can have a very healthy stop loss that looks like this. If you're someone that is shooting just for a retest of the highs, bang, you still got almost a 1.5 risk reward there. And of course, if you're someone that is shooting higher, right, you're going to have an even bigger one, again, going up to, let's just say 21 right here, right? Really, really good risk reward. Now, if you're a conservative, this is an aggressive entry. I consider a higher high, higher close an aggressive entry. The most aggressive would just be like a limit order there, which I think would, well, to each his own. This is the most aggressive entry I'd take. If you wanted to take more of a conservative entry, what do you think you can do? If you think you know the answer, pause the video because I'm going to spoil it in 5, 4, 3, 2, 1. You can wait for a double bottom, right? Price action came down to this level. We pivoted a little bit. Price action may decide to retest here. And if we do, that will give you a little bit more confirmation of this potential move up. It may also give you a better risk reward, right? It may take your entry a little bit lower down into this area, which is going to reduce your stop, which is going to increase your reward, and boom, you put yourself in a better situation. Another opportunity may be a 26.18 opportunity, and I think I'm actually going to show you one next. Oh, look at that. Next. I promise I didn't plan that, but I knew I had one on the radar. So let's actually go to that next on the Euro Canada. Euro Canada, another chart that is messy because, again, I never look at these pairs aside from this weekend video, or aside from the live room, I should say. But what we were looking at was this. We were looking at a double bottom. Hopefully you guys can see this. Price comes down, boop, 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 boop. Pivots, as we mentioned before, comes down for a retest here. Right? We can combine that with the RSI being oversold as well. And again, massively oversold because traditionally oversold is 70. My oversold is traditionally oversold is 30. My oversold is 20. This looks like what, about 10? 14. So really, 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 really low. Then we spoke about, okay, well, if you missed the double bottom or you can't take the double bottom or you don't like double bottoms, right? The next way to get involved would be a 26.18 trade. And the 26.18 trade is this. The 2 stands for a double bottom, and then that's followed by a 618 Fibonacci retracement. So you can see my Fibonacci retracement here, the small one, was taken from this low right here, boop, to that high right here, boop. And you're looking for price to come down into that 618, either entering aggressively right at the 618 on a limit order or waiting for a reason for entry in that zone. And then boom, it shot right up. So we had a few target levels we were looking for, right? Target 1 we considered right here, right? We did a bunch of analysis and went through different scenarios. And as a group, we decided that our first target was going to be right here. This was a level of Fibonacci confluence, a 382, taken from swing high to swing low, and a 127. And then target 2 is going to be right here, more Fibonacci confluence, a 1618 Fibonacci extension, and a 50% retracement. So looking for those fib levels to overlap. A third level, going back to our volume, no, that's drugs, right? Volume? I can't, volume. Going back to our vol, there we go. I'm gonna edit that out if I remember. I'm probably gonna forget. We have our point of change, so the biggest spike in volume coming out right at our higher level of structure. So this would be the next area that I would anticipate price going to. Now, there are 2 cool things that are happening here, and I'll show you how to get there. I want to delete some of the stuff on my chart, though, so it gives us a clear idea. So, one is going to be this. Simple. If we break and close above these highs, then, as we spoke about before, expect price to go to this level. Either straight there, or we break, we pull back, and we get there, whatever fits your fancy, but that is a trade in its own right. A second one may be a potential advanced pattern formation, right? It looks like this is going to be a potential Gartley or bat. I'm going to take my swing low right here, to my swing high right there. And I'm going to measure out this leg with my Fibonacci retracement tool. I'm going to drag it from that low, the wick, to the high, the wick. And we're going to see that it comes to a 50%, just misses a 618. which means I'm going to alert for a potential bat pattern. So if price does this, X to A to B, B to C right here, and then C to D coming down to this 886, that would give me a bullish bat pattern right at a pretty decent level of structure. Obviously, this is a bullish opportunity in its own right, but if you are someone who is interested in holding this for more, keep this bigger target level in the back of your mind for extended target consideration. Next, we're taking a break from the Forex market and we're going to head back to the stock market, the Dow Jones, right? We've seen, I'll get rid of the analysis from a while ago here. We've seen a little bit of a dip to end the week, more AI fears, but here's what we have, right? We have a higher high, higher close, right? Identify, predict, decide, execute. Where is my most recent level of structure? Right here. Do I have anything else to fear in the past? No, just this dinosaur, which I can go back and get more information from, but I won't do that right now. But the point is, we identify a higher high, higher close. We can then predict that price is likely to go higher. We then have to decide, that's the E part of the process, if price is likely to go higher, how can I get involved? Again, my personal style is a pullback trader. So I'm not a breakout trader. A breakout trader would have traded either right here on the breakout as soon as we broke above this level, or right after the violation candle right here, which would have had them feeling pretty sad as we retrace back down. So I personally like to see the breakout. I like everyone to get all rowdy and whatever. And then I like for price to get cheaper, right? Because I'm a frugal dude and I like to buy that way. And that's exactly what we're looking at here. If price were to retrace, I would expect us to retrace to our previous level of structure resistance, which was violated and should now act as support. As I go down to a lower time frame, my 4 hour, you can see our nice little turnaround. We came up, 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 just like the baseball analogy I always tell you. Dust is coming off of that. That's nasty. And there's a hole in here, probably spiders or something. Anyway, where you throw the baseball up and eventually it runs out of steam and comes down. This is pretty much doing the same thing. It came up, it ran out of steam, and now it's giving us some relief. And that relief came to our previous level of structure resistance, which was broken and is now expected to act as structure support. I haven't measured any fibs on here, but I spy with my little eye a 382 Fibonacci retracement. Don't you doubt me, I'm on. Yeah, look at that. Right? Probably a 50% from this lower one too. I hope I'm not getting greedy, aren't I? I'm getting greedy. No, I'm not getting greedy. I knew it. I knew it. Yeah. You like that? Yeah, you like that, right? So Fibonacci confluence, previous level of structure, but wait, there's more. We have some pretty good signals. Now, for you guys who attended the workshop, or really any workshop that I've ever done, we always start off by talking about the ability to read a candlestick, and not just like, is it red, is it green, is it black or white, but the story that it tells. We also break candlesticks into kind of different components: strong, weak, and neutral. So we look at the story that this red candle has here. Yes, it's a bearish candle. Yes, it's a high momentum bearish candle, but look what happened at the very end. We saw a long tail to the downside, which means there was some rejection here. Funny enough, if I look left, we saw the exact opposite right here. And no surprise, because again, we're at a previous level of structure. That's what structure does. Look left, structure leaves clues. We then followed that up with another bearish candle that I really consider to be a bullish candle, because although this is technically bearish, price closed lower than it opened. All signs point to bullish here. It is a weak bearish candle, meaning the close is in the upper third. It has a long tail to the downside, which means there was some buying rejection. And it's also an inside bar, which is a sign of consolidation. So a few ways you can look to enter this as the week opens. If you are aggressive, well, if you're super aggressive, you can just buy right away. If you are less than super aggressive, but still really aggressive, you can use this as an inside bar breakout where you would, or a bias inside bar breakout, where you would put a buy stop order right there. And if price trades above the high of this candle, boom, you're involved. Or you can wait for confirmation like a higher high, higher close, like what we saw on one of those pairs we looked at earlier. So Doesn't matter how you want to do it, but those are ways to get involved here and hop on the bullish trend potentially. Next up, we're heading to the dollar yen. And if you notice that my face is smiley and glowy, it isn't the makeup that I put on before this video. It's because the dollar yen has been my best friend. I actually just put out a podcast Friday about this. If you guys want to check it out, it talks about the emotional roller coaster that this trade put me on and kind of the lessons that come with that for you guys so that you can hopefully steer through your drawdowns and rough emotional times a little bit better. I think I titled it like I survived 11 days of hell, something like that. I don't know. But it also talks about kind of the game-changing trade and how important that was to my career. But the point was this was a very frustrating trade for me. I was in it for a very, very long time. And patience literally paid me, and it ended up being my biggest trade of the year. So I'm happy. Part of me wants to leave it alone for a long time. I don't want to kind of revisit it, but we do have another opportunity setting up here, and it is going to be a potential bearish cipher pattern, right? Our X leg, and this may actually be a little bit clearer on the hourly. I haven't looked there, but let's go down here right now. Either way, it's gonna be a little bit different on the hourly, but we'll just measure on the 4-hour. You have an X to A right there. I'm gonna bring on my Fibonacci retracement tool from my swing high right there to my swing low. For our cipher, we need a 3D2 to be hit. That is hit, so check that box right there. I'm then gonna take my Fibonacci extension tool from the swing high to the swing low right here. And I need my 127 to be hit for my C leg. If this is confusing, don't worry. When we teach these patterns, it is literally marked off rule by rule. So it's just like going through a checklist. So I know it seems like you have to remember a lot of stuff, but if you just write it down, step 1, look for this, step 2, look for that, it makes life a lot easier. But anyway, this cipher pattern comes in the form of this: X to A to B, B to C, and then a CD completion, not there. Let me drag this down some here. There we go. Right around here for a bearish entry. Now, next up is Pound Canada. I'm going to make this one short and quick. We've been consolidating, as you can see, price going sideways. I got a question the other day from a trader about, he was a little bit confused about reading trends within consolidation. He was like, Akil, I'm looking at a period of consolidation and I don't know whether this is an extension or a pullback. And I think it's important to remember, and why I want to remind you guys, that consolidation is its own thing, right? You have trends that go up, you have trends that go down, and then you have consolidation, which is sideways movement. So yes, there are going to be smaller micro trends within periods of consolidation, but you don't necessarily have to look for a bullish or bearish trend while we're in consolidation. Consolidation is the trend. It's sideways markets. Now, at some point, this is going to break out. And you guys know how I like to get down. I like to bracket the highs and say if we break out to the upside, then we're likely to go to here. And that sets up kind of a nice little pullback trade where we break and close above, pull back, and then rally up there. I like to say if we break out to the downside, where we're likely to go to, right down here. Now, the thing about the downside movement is there's just not that much room. If we take out our ruler here, a move from here to the upside level is about 75 pips. A move from this lower level to down here is about 40 pips. And that's like if you were to get the perfect entry. So I'm not saying it's not a tradable opportunity, but it's a little bit tough. So although I would still consider this a potential trading opportunity to the downside, I would be more curious with the counter trend trading action that could happen down here, meaning as a counter trend trader, how can I look to buy down at this level back up to this zone or wherever we're going to go? And we can look for all the stuff that we talked about all day down here, right? We can come down, get a 3-bar reversal like we did previously. We can have a double top, double bottom, or double bottom down here, excuse me. But we also have an advanced pattern formation for you guys who are looking to get aggressive, and I'll show you what that is. This is the butterfly pattern, right? We went over the philosophy and psychology of this last week on the euro dollar. This is the same thing. Swing low to swing high, X to A. First retracement down there, A to B. Deep retracement right here, our B to C. And our CD completion would be right at this 127. Look left, structure leaves clues. So if you're someone that wanted an aggressive way to get involved and play the relief of this potential breakout, a butterfly pattern could be that way. And this is one of the rare ones again, rare ones, say that 10 times fast, where you do have a level of structure that you can use as protection for your stop loss. Next, we're going to be on the dollar Swiss. And again, speaking of consolidation, the dollar Swiss has been in a period of consolidation. They did have an interest rate decision last week. They kept rates at 0. They said they want to try as hard as possible not to go into the negative territory. Just food for thought, right? Anyway, consolidation breeds advanced pattern formations, and that's exactly what we have here. And I don't really follow the Swiss too much. I'm just looking at this, and it looks like we've had about 3 or 4 advanced pattern formations recently in this consolidation period. So let's play the game. How many can you name? I see one right here. This was a bearish bat, X to A to B, B to C, C to D. It looks like we came off that bearish bat and put in a bullish bat, X to A to B, B to C, C to D. I wonder if this actually won or not. Let's see. It's going to be close. No, that would have been a loser, right? So you have, let's do a smiley face, money face for wins. Yes, one winner right there. Let's do an angry cursing face for losses. One loss right there. We then put in, what do we put in here? A cipher pattern. I see a cipher pattern here. Let me just make sure this doesn't close below the 1414. Again, I haven't looked at this yet, so we're just seeing things. Yep. So a cipher pattern here, which is going to look like this. X to, oh, come on now. X to A to B, B to C, C to D up here. Let's just double check that. Oh, spot on. Look at that. That one was a winner as well, so we will add good old smiley face there. And maybe we had, oh, do we have back-to-back ciphers? Sorry guys, this is not part of the video, but I wouldn't have this as the X to A leg. Some of you may have another cipher in here as well. I'm gonna measure it out. It wouldn't be one for me, but I'm just curious if we did. Let's see. Horrible video. I'm sorry guys. No, that wouldn't have been. No, it would have been a cipher. Let's see. Yeah, look at that. Maybe I should count it since it's one. X to A to B, B to C, C to D right here. Again, not one that I would see, but some of you guys may see that. That's another winner. Do we have a bat here? This would be a loser. Promise I'm going to get into new analysis, guys. I promise. Yep, there we go. Another bat pattern. X to A to B, B to C, C to D up here. There's another loser for you, which puts our total at 1, 2, 3 winners, 2 losers, and now we're back to the next pattern. Finally, another potential bullish bat pattern looking like this. Swing low to swing high, X to A. Move right back to our 50% retracement. Make sure you check your data for this, A to B. A move back up here, giving us our C leg. And if we come down to our 886, which we were very close to doing, this would be the completion point for another bullish bat pattern. So we always say that consolidation breeds patterns. What more proof do you need? This is also a great example of how we talk about frequency in the market. So frequency in the market is like pretty much how many trades do you get? And we say that there's really 3 ways you can go about it. You can trade a single strategy on a lot of pairs to get a lot of frequency. You can trade one pair only and trade multiple strategies like this to get a lot of frequency, or you can do a combination of both where you trade multiple strategies on a lot of pairs to get frequency. But this would be a good example of like, hey, we had a trader on the platform who only traded the pound yen for the majority of his trading career, and he was very, very successful. And people were like, well, how are you successful trading one pair? Well, he traded a lot of strategies on that one pair. So if you are an advanced pattern formation trader who trades Gartleys and ciphers and bats, and you only want to trade the dollar Swiss, here's what you have on the dollar Swiss. And this is a daily chart, so imagine what happens on the lower time frames. Now, before we get into the fundamental stuff, just want to catch up on a few pairs that we had on our radar from last week. I think we spoke about it in the Trading Edge. If not, we definitely spoke about it during the week. But we had a Gartley pattern here on gold. You can see that filled to end the week. So this was a nice short right here. I did get a request to talk about gold. I don't have anything else to say about this. We've got the Gartley pattern. This is a nice short right here. Not at market if you didn't take it already, because it's already kind of past the completion point, so you would be late and you don't want to do that. But who knows, the market may give you a second opportunity and come back up for like a double top-ish pattern or something like that. Another one is going to be on the DAX. The DAX was a bat, if I remember correctly. Same situation. Yep. Definitely spoke about this in last week's video, I think. But we had a nice little bat pattern right up here as well. And once again, that completed to end the week. Now, to really quickly just go over some of the fundamental stuff that's going on, because again, I feel like this is going to be close to an hour-long video. We have some interest rate decisions coming out this week. We have the Bank of England Thursday. We have the ECB, European Central Bank, on Thursday. And then we have Bank of Japan on Thursday/Friday-ish, depending on where you live. So Bank of England, the expectation is going to be a rate cut, right? So that is what the market is expecting already. We got some news today, Friday, yep, that came out that pretty much put the nail in the coffin that it's going to happen. So I wouldn't be surprised to see that priced more, even more into the market as the week begins. But as always, when the decision day comes out, it's all about the future. That's what's going to be most important. Now, for the ECB, there is an expected hold, so there is no expected kind of rate change happening this Thursday. But the thing to watch out for when we talk about future guidance, right, is are they going to talk about, hey, let's start hiking rates in 2026, right? That is what the market is waiting for confirmation of. Then there's Bank of Japan, who again is trying everything possible to boost their currency. They are blatantly coming out saying we are hiking, we are hiking, we are hiking, we are hiking, we are intervening, we are intervening, we are intervening. So yes, there is an expected hike coming out. Does the market care? I don't really know. Japan's weird. So not Japan. Bank of Japan, the currency is weird. I have nothing against Japan. I've never been there. Heard it's a fabulous place. But the Bank of Japan is weird. So just keep an eye out for that. And they always do that stuff at sneaky times in the market. So I'll definitely have kind of my powder dry during that. So lastly, actually, well, not lastly, last of the news announcements is going to be the U.S. jobs number. So if you guys remember about a month ago or 2 months ago now, I guess, we had a government shutdown that lasted a very long time. We were missing all this very important jobs data that the Fed was using to make decisions about interest rates. And we decided that, hey, we're just going to forget it, not release it. And we're going to combine it with the new jobs number and release it on a random Tuesday after an interest rate decision has been made. I don't know. But anyway, a boatload of jobs number information from November and October is going to be coming out on the 16th. We know that this is one of the key kind of things that the Fed is looking for as far as kind of making future decisions. And we haven't had these numbers in a while. So I do think the Fed is going to look into it. And I do think the market is going to pay very, very close attention to what these numbers say about jobs particularly. Now, the last bit of news is going to come from our good old President Donald Trump. And this has to do with the new Fed chair rumors. Now, the FOMC has a Fed chair. He's kind of the person in charge, although they all vote. He's kind of the leader in the monetary policy decision making, right? We've known from a very, very long time that Trump has been over here, Jerome Powell has been over here, and they kind of headbutt on monetary policy. So Jerome Powell is going to be gone. And our president, Donald Trump, gets to elect the new Fed chair. And right now, he has come out and said he is deciding between the two Kevins. Yes, you can't make this stuff up. It does sound as comical as it seems, right? The two Kevins. And here's the thing. These two Kevins are both Trump-appointed people. A lot of the market believes they are just puppets for the president. And the president has actually come out and said, he probably regrets this. Let me see if I can find the quote. He came out and said that I'm leaning towards the two Kevins to take Jerome Powell's Fed chair spot next year. He said that the Fed chair, quote, should consult with him on where to set interest rates. And if you know anything about the FOMC and their whole integrity, that's not what they're supposed to do. They are supposed to separate themselves from politics, or else the market doesn't trust them to make decisions that are in the best nature of the economy, and everything gets flipped upside down. So the White House is kind of like stepping away from that statement. But if you know, you know. We've thought about this the entire time. If you guys have been listening to the Trading Coach podcast, we had the whole thing about the shadow Fed and how, again, Trump has been sneaking into the meetings with the mask of other people trying to influence and make decisions. So Anyway, the market cares about this because the more it seems like Trump has an insider, the more it seems like the Fed may be geared to do his bidding and kind of follow what he wants instead of doing what they think is best. Now, with that being said, understand that the Fed chair doesn't make the decision. They vote on it, right? But seeing how we already have kind of a divided FOMC, this could be something that sways it more in one direction than the other direction. So again, not news that's coming out, but news that's coming out. This is the stuff that the market cares about that you won't find on the Forex Factory. So yeah, that's it. Another marathon episode, but I hope you guys enjoyed. You wanted this, so now you get this every week. But if you liked it, do me a favor, hit that like button, leave any questions or comments below, and make sure you check out the channel for other videos and other cool stuff that I do on a regular basis here. All right, time to feed the belly, and until next time, plan your trade, trade your plan. Take care.
Be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is